Hey, this is Jim. It is 5:14 p.m. in San Francisco, California on August the 22nd. I'm not a financial advisor and I don't provide financial advice. I never, through any of these video presentations, intend to support the purchase or encourage the purchase of any equity, any financial instrument whatsoever. This particular conversation will be about the stock AMC and the stock APE. So here we are starting out on the New York Stock Exchange website. Both ticker symbol AMC and ticker symbol APE are traded through the New York Stock Exchange on the New York Stock Exchange. So first off, I want to show you the halts. This is a page of all the trading halts. Date 8/22 of 2022. So that's today. Here's APE, halt. We'll start with this particular timestamp because it's particularly interesting to me. This was this is going to be 12:33 my time, PST. If you guys are subscribers, you know that of the AMC service, you know that I had a zone of strength that I talked about when I messaged you guys right here. Let's see if AMC can move up into the 12:35 p.m. PST zone of strength. Okay. So the stock was halted at 12:33 and didn't open until 12:38. So basically the heart of that zone of strength. We sat through a halt. The stock was ripping up into that zone of strength, and I'm going to show you where it was in relation to a 30% move that it made late in the day. So moving on from that APE halt late in the session, you see another APE halt, APE halted, APE halted, APE halted, APE halted, APE halted, AMC halted, APE halted, AMC halted, APE halted, AMC halted, APE halted, and that was the first halt in the trading session early in the morning. And that halt was 8 minutes into the, no, let's see, 30. So yes, 8 minutes into the trading session, and from 9:38 until 9:43. So as you can see, I mean, you can look around at some of the other ticker symbols on this list. I don't want to spend too much time, but spoiler alert. We were both AMC and APE were two ticker symbols that were halted more than any of the others, and probably more than any on this list combined. I'd have to go back and do the quick math, but you guys get the point. Now, despite all of that, you can see this the setup on the AMC setup on the Anemoy terminal, the 6-month chart. This has been adjusted for the price adjustment that Adam Aaron intended, and that most people who follow AMC stock had anticipated, something around the 50% type level. And early on this morning, when you combine the AMC shares and the AMC share price and the APE share price, obviously the two combined were trading at a really nice premium to the Friday AMC closing price of $18.01. So as far as the setup goes on the Anemoy terminal, a beautiful move up off of that weekly trigger, exactly what you'd expect. The stock ripped straight back up through the daily trigger, the monthly trigger, and the hourly trigger. We've got a solid 4 trigger cluster here, And as we move over to the day trader chart, you can see this beautiful 3-trigger cluster that the stock closed with. 3-trigger cluster configuration. Now, whether or not that turns out to be bullish or bearish, we'll see tomorrow. If I want to lean on the BAM model zones of strength and weakness moving forward, BAM is predicting that even if the stock opens soft, it will turn around, rally sharply, not only tomorrow, but for the next 3 sessions, and in a big, big way, something along the lines of this very aggressive move that happened early in the day. I'll show you guys what that looked like. A couple interesting charts here. These are 1-minute price bars, and you guys can see here NT that's not trading. So these gaps represent some of those halts that I read off that New York Stock Exchange halt list. This is APE up on the top. This is AMC down on the bottom. I have a little note here showing the length of some of the halts. So in AMC, this was a 5-minute halt. This was a 4-minute halt, and this was a 4-minute halt. All sort of layered in and not necessarily syncing up exactly with the periods where APE was not trading / halted. Here's the other interesting thing. You have a late session, 2 halts, 2 periods where you're not trading in APE. AMC continued to trade, but again, the one thing that you'll find in common with these halts is price moves increasingly picking up momentum to the upside, with bars increasing in size and intensity and velocity in my world, and then a trading halt and sort of wet blanket, something to end the party. Now, this one I'm going to show you. This was the halt in APE that happened late in the day, directly into the bullseye zone of the BAM predicted zone of strength. I'll show you what else is interesting about this. If we take a look at the size of the price movements today, what you'll see is that early in the morning in ticker symbol APE, we posted a print here of $6.93. That was a low, 632. So, just barely into the regular trading session. Again, these times represent my time, West Coast, San Francisco, PST. So that syncs up with the 9:32 in New York exchange time. But you guys can see from that 693 low in APE up into this 1050 high, and that took place between 6:32 in the morning and 6:49 in the morning. So didn't take much time. That was a 51% move. Just to put things in context, at some of the sort of the underlying characteristics of the human emotion behind the APE trading this morning, and again, multiple halts to sort of wet blanket things. This was the zone of strength late in the day, where the BAM model had predicted the zone of strength into 1235. That would have been the bullseye timestamp. You guys know how this works. If you're a BAM subscriber, we add periods of price bar activity on both sides of the actual bullseye, and expect the price to unfold into sort of a window or a zone. So that's why it's called a zone of strength. Here was the $5.21 session low. Here's where the stock started to turn off of that 1230. Again, this is PST off that 1230 low. Here's your 1231 price bar, 1232, 1233, 1234, and then you'll see it skip to 1239, and that reflects the halt. So the halt happened directly into the bullseye of our expected 1235 zone of strength. Again, you can look at the price stamp at the top of this pop-up box. I'll move it up here so you can see it a little bit better. So that's 1234, and then the next bar that prints is 1239. In between that, those two price bars, we had that halt. And again, this was a 30% move from that 521 session low up to this late session high, all unfolded in less than 30 minutes, and that even was with the stock halted for a full 4 minutes there. So anyway, you can see the underlying, not only the underlying strength, but the volatility in these stocks and in the trading of these stocks, definitely reflecting a lot of not only interest, but maybe a lot of people perhaps on the wrong side of a short trade would be my guess. So that's what that looks like, you guys. The last thing I'll leave you with is if we wanted to take a look at, and this price chart's not going to be adjusted, so let's just focus on the volume characteristics. If we wanted to just focus on volume characteristics, you guys know I posted another video where I was just pointing out sort of the straightforward setup as far as wedging volume characteristics, and telling you guys that as we track these price spikes in volume and then draw a horizontal line at the top of what I consider to be nesting or resting volume, meaning when we look away from the volume spike highs and look at the absolute spike highs above this nesting, and we look at those volume spikes that are sort of in the high range in the nesting area, that's where we draw this horizontal line. And then where we get these two lines to collide, you expect to see volume rise coming out of the other side, which is exactly what we saw. The reason I bring this up is because if you guys have been with me for a year and a half, you know that I, back in May and June, before the big 700% run up, I was tracking a 30 million share per 60-minute bar, what I call ignition volume. And so the idea is that if the stock were to print 30 million shares per 60-minute bar, so per hour for 3 consecutive hours, that's considered ignition volume. And as long as the stock price was rising, then we would expect to see a potential, at least a very strong uptrend, if not a melt up leg. We ended up getting that melt up leg. So today we had this 39.6 million share bar. We had a 18.6 million share bar, and we had a 13.6 million share bar. If there's not a lot of history behind this for what I'm about to say, so grain of salt, but to me it makes common sense. If you think in terms of the intention of the sort of half of the value of the AMC common being represented in existing AMC common, half the value being represented in the dividend trading under APE, and you would, or I would at least expect to see sort of some of the volume remaining over in AMC, the daily trading volume remaining in AMC, and some of the daily trading volume moving over to APE. So if we want to just use really quick dumbed down math and say, okay, let's chop this ignition volume in half, we'd move from 30 million shares per 60-minute bar to 15 million shares. So if we use that approach, we were one bar and just a little bit of volume away from ignition here. So we would have done ignition volume in the first bar of the trading session, the second bar of the trading session, and then we would have missed by less than 2 million shares on that third bar. Pretty close. And because of the fact that the BAM model has these multiple zones of strength over the next 3 trading sessions, I want to keep a close eye on this. And if the new nesting volume in AMC common becomes somewhere around, let's call it 10 million, 10.5 per 60-minute bar, and the stock starts rising, then I'm going to consider that the three consecutive volume bars, first thing this morning, first 3 hours of trading this morning on the 22nd of August, were and are sufficient to indicate ignition volume and that we could be off to the races here. So that's what I'll leave you guys with. Again, grain of salt on this because I've never had to try to model this situation where you have an entirely new ticker symbol created via a dividend, and all the nuances behind that, including the fact that we didn't exactly see that 50-50 split today, although we really did see sort of a combined value that made a lot of sense compared to the Friday closing price of 1801. All right, you guys, hope that was helpful. Again, I really hate the fact that the younger investors and some of the newer investors, but especially the younger investors, are having to see some of the stuff that we're seeing right now as far as not only the way the market's functioning, but the way certain things seem like they are stacking the cards in favor of a certain group of people. To me, that's just it can potentially put a really bad taste in the mouth of young potential retail investors. I think it damages the whole idea of capitalism and kind of shoves this whole experience clearly and cleanly into the bucket called and labeled crony capitalism. Hopefully this experience won't turn all of you off. I'm still a huge believer in capitalism and in the systems that we had built in the United States, our founding fathers and thereafter. But I'm also pretty sick to my stomach about some of the stuff I see, both through just generic crony capitalism and specifically with some of the stuff happening in the market these days. So anyway, off the soapbox, you guys, good luck.